Welcome to day 6 of our Christmas countdown series. We moved from rates and bonds to FX and gold, and today we open the window on commodities. Oil, industrial metals, uranium, platinum, and more. Consensus here is messy. On one side, you have the energy transition story and worries about slower global growth. On the other, you have years of underinvestment, geopolitics, and a big build out in defense and infrastructure. Commodities sit right at the intersection of these opposing forces. Take oil. It's caught between a structural push away from fossil fuels and a very real lack of new supply. That doesn't scream a one way bull market, but it does argue for a world of spikes and squeezes whenever geopolitics or growth surprise. Industrial metals. Think copper and its friends are leveraged to grid upgrades, electrification, data centers, and defense capex, but also heavily exposed to the global economic cycle and especially to China. So the story is a long term constructive one, but tactically volatile. And then you have uranium, which has become a market darling. Tight supply, nuclear back in favor, and a slowly improving ESG narrative. The fundamentals are interesting, but positioning there is already perhaps crowded or hot. Commodities are not a single trade, they're a basket of very different stories. We like them as selective, risk managed diversifiers and as insurance against inflation and geopolitical shocks rather than a simple buy everything and forget allocation. The big surprise, if it is one, will be in oil. Currently looking bearish, but will it surprise on the upside? This is Sunil Garg from Kenai and Lighthouse Canton.